Hey guys, 2024 was a crazy year for AI stock splits, and it looked like 2025 may be even more amazing. Stock splits have been trending like crazy, specifically around AI and technology companies. And NVIDIA is a perfect example of a hot stock split, especially if you're thinking about buying now in 2024. Believe it or not, but in 1999, NVIDIA debuted with its IPO at, wait for it, $12 a share. Fast forward to today, and it's one of the most valuable companies globally. And it's worth over $3 trillion. So if you bought one share from its initial IPO days, that would have ballooned into 470 shares now. And that's the power of a company that's growing by more than 2,500% in the past 5 years alone. But putting history aside, stock splits are one of the most interesting things about NVIDIA. And the most recent one was its 10-for-1 stock split that happened earlier this year. But what does this mean overall? The point of a stock split is to get them to lower the price per share. And this makes it easier for more and more investors to actually buy the stock. And what's crazy is that these shares that have been split have been growing over time. So what does NVIDIA have to lose here? Nothing, because stock splits don't really impact the company financially. But here's the thing, NVIDIA isn't the only one in the ring for AI stock. You see, there's this AI hardware company called Super Microcomputer. And even though their market value is at $12.5 billion, they recently took a dip in their stock value by more than 80%. But stop. It doesn't mean you should start buying, because these types of AI stock are always at high risk. And apparently there was also this recent speculation that Supermicro might be removed from the Nasdaq stock exchange. The Supermicro also did a 10-for-1 stock split recently, which makes you wonder if stocks actually go up in value after their split. A great example to look at here is Broadcom. They also announced a 10-for-1 stock split earlier this year, specifically June. And as you can see here, their stock price has definitely been trending up. And in this case, if you bought shares immediately after the stock split, you initially saw a spike right after the split itself, which makes sense given big changes do that. But overall, its value definitely has been increasing with time. And if you're keeping an eye out for a stock split, two AI companies that are on the rise are Meta and ServiceNow. Why? Because their stock value has been increasing like crazy since early 2024. Both companies have been cutting costs, and their revenues are showing nearly an 80% growth. Again, there's no guarantees, but what's trending right now is that companies that are in this position have higher and higher stock prices. And what they want the most is for more and more people to invest. A stock split makes it a lot easier for buyers to do this. With most tech companies, if you invested even $1,000 in the early year 2000 days, there's a good chance that those stocks might be worth over hundreds of thousands of dollars today. So for people who are looking for a chance to invest in these tech giants, a stock split might just be your calling. Thanks for watching. And for more on AI and tech stocks, please consider subscribing to this channel.